So we just heard news that the Ukraine war could be wrapping up, and as a stock trader, I'm sure as you're watching this video right now, you may be wondering how is that going to affect the stock market? Because at the end of the day, all I care about is the money in my portfolio, and you should care, right? So I brought up 5 key things that could be market impacts due to the Ukraine war ending. Now that we have these peace talks that are underway, we're starting to see how we can keep an eye on certain sectors of the market in general, and maybe unearth opportunities or tighten risks depending on your exposure and your portfolio. So the first thing that I have here is that energy prices theoretically would likely fall, which should ease inflation in general. So the peace agreement could stabilize global oil supply and really natural gas markets, I guess, more specifically, which should reduce geopolitical risks. As a result, lower energy prices will theoretically improve margins for transporting, manufacturing, all the things that need obviously energy, right? And as a result, will improve market sentiment because energy prices going down obviously help support these industries. Consequently, prices should drop as well because those savings would hopefully be passed on to the consumer, or these companies would make more money. Either way, energy prices theoretically would fall, which should have a positive effect on inflation by easing inflation. If you are a European trader, for my second point, looking specifically at European equities, so maybe you're not even a European trader, but if you're exposed to any ADRs or any companies that have a big exposure in Europe, I would watch European equities or European stocks that have either strong exposure to the stocks that have strong exposure to European markets, or stocks that are solely based in Europe in general, because they more than likely would rally. Um, because of this war, Europe is carrying a lot of the economic burden in general, not to mention any sort of disruption, right? If, God forbid, bombs go off or whatever happens, I don't know, I don't live in Europe, but lots of energy disruptions that could have happened during the war in general. We could have also seen more or heightened defensive spending across the board. And biggest thing of all is that uncertainty factor. And it's something I talk about quite a bit on this channel, is how the market hates uncertainty. And once uncertainty resolves itself, it's typically a bullish reaction. With war, we don't know what's going to happen. We don't know if someone does something stupid, especially in Europe when all these countries are so close together. It's not like the United States where each state is like a country. These are different countries that are right next door to each other, right? So that could cause an effect on the market in general, because if anything happens with the war, again, a misfired missile, whatever, could start a whole powder keg of other issues. So that uncertainty leaving the market will be bullish for European equities, and I would keep an eye on those stocks individually as any of those companies. So if you took a European chocolate manufacturer and you took an American chocolate manufacturer and put them in the same realm and assume that they make the same amount of money, etc., their balance sheets are similar, that European stock, probably that one day when we actually get stronger, more confirmed reports that the war is ending, is probably going to outperform the American stock, just because of that uncertainty is leaving that risk for that specific company. Third thing to keep an eye on is your defensive stocks. They may experience a correction. So obviously when there's war, defensive stocks go up. More money is required or requested to purchase guns and tanks and missiles and everything. So as a result, defensive stocks could experience some level of a correction, obviously, due to there not being a need for them, right? We don't need more guns, more missiles, more ammunition, more rockets, whatever, because there's no war. So a resolution would theoretically lower expectations for future orders. So if we're talking about future guidance, not something you may see right away, but when we get those next conference calls for the next earnings reports, they may mention on there, or guide down even, due to a war ending. So there's a lower demand. If there's lower demand, they don't make as much money. So that makes a lot of logical sense. It's something to keep an eye on if you want kind of like a bearish thing to keep an eye on, or if you're long defensive stocks as a risk factor to be aware of. The fourth thing is your global risk appetite theoretically would rise. So whenever there's a major geopolitical conflict, war, whatever, ending that, so a resolution to that, is going to remove a large tail risk event in general. Basically symbolizing that investors are going to rotate into riskier assets because things feel safer in general. So equities and emerging markets where maybe they wouldn't put their money otherwise, even cyclicals, because that uncertainty is falling, because they can feel more comfortable taking more risks. And as a result, they will move into these a little bit riskier assets in general. Again, uncertainty leaving the market, tends to be bullish, and you should look at those riskier assets, companies that don't make any money, especially if they're European companies that don't make any money, but they have a great product that they're trying to go profitable. Those would be the kind of companies I would look at specifically for any potential additional upside on them. And lastly, your commodity market. So I'm not someone who typically trades commodities, but theoretically, and again, just working in the mindset of logic, right? Grain, fertilizer, metals, all these things would theoretically stabilize more, which should help supply chain dependent sectors. Mainly looking at, or what we know, or what I personally know about Ukraine and Russia, they export a lot of wheat, corn, like I said, fertilizer, some metals, precious metals, or in Ukraine especially. If we restore trade flows by reducing the risk of war, right, or there being no war, that would reduce theoretically volatility in the cost of a lot of these items. Consequently, that would improve profitability. So you should watch those commodity markets. If you're someone who trades commodities, that's something obviously you have an interest in. But even these companies that are adjacent. So especially if you're looking at rare earth companies, that Ukraine war ending could be actually a positive for these companies as well. So that was my 5 things to keep an eye on. If and when the Ukraine war actually ends, we got a little bit more of a firmer peace deal looking like it's coming to fruition today. But if we actually see that war end, these 5 points are what I'm personally keeping an eye on into the future.